This video is a review of Fast Retailing's fiscal year 2025 first half financial results, period from September 2024 to February 2025. Fast Retailing Co. is a major Japanese retail holding company, best known as the parent company of Uniqlo, one of the largest global clothing brands. Founder and CEO Tadashi Yanai, who is one of Japan's wealthiest individuals, leads the company. Fast retailing emphasizes efficiency, innovation like heat tech and AIRism fabrics, and minimalistic style. FY2025 first half group results. In the first half of fiscal year 2025, from September 2024 to February 2025, Fast Retailing achieved significant revenue and profit growth, exceeding company estimates with revenue rising 12% year-on-year to 1,790.1 billion yen. Operating profit increased 18.3% to 304.2 billion yen, and profit attributable to owners of the parent climbed 19.2% to 233.5 billion yen, representing a strong 57% progress toward the revised full-year net profit 410 billion yen. FY 2025 first half. Results, main points. In the first half of fiscal year 2025, Uniqlo delivered record-breaking performance for the group overall, driven by strong revenue and profit growth in Japan, Southeast Asia, and other regions, Asia, India, Australia, North America, and Europe, supported by solid global demand for core products, effective strategic marketing, and well-managed winter inventory. Successful new store openings, particularly in North America and Europe, acted as powerful media touchpoints that stimulated a positive cycle of brand awareness and rising e-commerce sales, while operations in mainland China and the GU brand faced profit declines amid market challenges, which the company is addressing through clear structural reforms to support future growth. First half breakdown by group operation. Uniqlo Japan and Uniqlo International, the main revenue drivers of Fast Retailing, delivered high profits in the first half of fiscal year 2025, with Uniqlo Japan posting a year-on-year revenue increase of 11.6% and a 26.4% rise in operating profit, while Uniqlo International saw revenue grow by 14.7% and operating profit by 11.7%, driven by strong sales and profitability across regions. Uniqlo Japan first half overview. Uniqlo Japan posted significant revenue and profit growth, delivering a record-breaking performance that exceeded expectations. This success was driven by well-prepared product strategies, aligned with shifting weather patterns and effective marketing efforts. The company's ability to meet customer needs led to a notable rise in sales, with strong demand from visiting tourists further boosting revenue. Profitability also improved thanks to a better gross profit margin and more efficient control of selling, general, and administrative expenses. Strategic stock preparation for winter, especially in response to the continued cold weather in the second quarter, led to strong sales of thermal items like heat tech innerwear, puff tech, and downwear. Additionally, robust sales during the New Year period contributed to the overall revenue increase. Uniqlo International first half overview. Uniqlo International achieved large revenue and profit gains as projected, marking a record performance. Strong growth came from regions such as Southeast Asia, India, Australia, North America, and Europe, where demand for core products increased and newly opened stores, especially in North America and Europe, drove strong sales and performance expansion. In contrast, revenue and profit declined in Greater China due to ongoing operational reforms. Additionally, the company agreed on advanced pricing arrangements with tax authorities in some countries starting from the second half of fiscal year 2024. This led to higher royalty rates in certain operations, raising the SG&A ratio by 0.4 percentage points in the first half of fiscal year 2025. However, since these were internal transactions, they had no impact on the group's overall consolidated performance. Group FY 2025 estimates. Fast Retailing has revised its business profit forecast upward by 10 billion yen and its operating profit forecast by 15 billion yen, signaling expectations for a record performance. In the first half, business profit exceeded the plan by around 20 billion yen, but the company has lowered its second-half forecast by approximately 10 billion yen to reflect a more conservative outlook. While revenue and business profit are still expected to grow in the second half, operating profit may decline slightly due to the absence of temporary gains recorded in fiscal year 2024, such as reversed impairment losses, which had boosted finance income to 5.9 billion yen last year, compared to a projected 2.5 billion yen in fiscal year 2025. Additionally, although it is unclear what exactly will happen yet, the impact of newly announced U.S. tariffs has been factored in, assuming no increase in product prices, and is expected to reduce second-half consolidated business profit by about 2 to 3%. FY2025 dividend estimates. Fast Retailing has announced its dividend estimates for fiscal year 2025. The company plans to pay an interim dividend of 240 yen and expects to pay a year-end dividend of 240 yen. This brings the total expected dividend for the year to 480 yen, which represents an 80 yen increase compared to the previous year, indicating Fast Retailing's intention to enhance shareholder returns. It reflects the company's continued commitment to shareholder return. Stock price. This is the Japanese yen-based chart for the last 1 year. The Japanese yen stock price is 45,530 yen as of April 11th, and the US dollar stock price is $31.73 as of April 11th. Current PBR is 6.36, and PER is 34.1. Dividend yield is 1.05%. Compared to the last few years, PBR and PER are roughly the same figure, but dividend yield is little higher. Dividend yield has been below 1.0 for a long time, but currently it is 1.05%. Dividend yield-wise, stock price is relatively lower due to the recent decline in stock prices and dividend amount increases. Conclusion. Fast Retailing delivered strong financial results, achieving the highest profit for the first half of the year. However, there are concerns as the Uniqlo China and GU businesses are facing declining profits. Despite this, the full-year forecast has been revised upward, and shareholder dividends have been increased, suggesting a generally positive outlook for now.